So blockchain technology, I will go out on a limb and say is one of the most foundational innovations of this century. I think it will create more wealth than the previous two tech booms combined. Blockchains do is they give us an ability to strip out, to liberate this $7 trillion in the trust industry, which is why the banks hate it so much, and use it for better purposes.
Renowned hedge fund manager and crypto enthusiast Mark Yusko anticipates that blockchain technology, the foundational element of the cryptocurrency industry, will catalyze a massive surge in wealth creation, surpassing the combined impact of the previous two technological revolutions. According to Yusko, Web 1 and 2 generated around $7 trillion in new wealth. However, the founder of Morgan Creek Capital is confident that Web 3 will usher in tens of trillions in new wealth over the coming years. A substantial portion of this wealth is expected to flow into leading cryptocurrencies like Bitcoin and Ethereum, as well as other digital assets built on the blockchain. Yusko's predictions extend beyond mere financial gains, as he envisions the complete dismantling of what he characterizes as the trust system within the traditional finance industry. This system, existing for centuries, has, in Yusko's view, exploited the masses to satisfy the few. It operates on the premise of entrusting your money with the expectation of eventual returns, a promise that may be broken at the system's discretion. Yusko estimates that custodians of the trust system, including banks, brokerages, auditors, and insurance companies, collectively amass $7 trillion annually for their services. He foresees that when the blockchain disrupts this corrupt trust system, the trillions currently absorbed by it will be redirected to a more equitable system that rewards individuals based on their contributions. Stay tuned for excerpts from Yusko's recent interview with Money Tree Investing.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So blockchain technology, I will go out on a limb and say is one of the most foundational innovations of this century. I think it will create more wealth than the previous two tech booms combined. And what do I mean by that? So Web 1, which is pretty amazing. So from the early 90s to the middle to 2010s, we had this thing called Web 1, the internet. And the internet created about $2 trillion of wealth. Companies like Cisco and early days of Microsoft and Intel, really big business. But $2 trillion, and that was a lot of money. And that was all about read, meaning I could now get access to information ubiquitously, instantaneously. In the old days when I was growing up, you're a little bit younger than me, but you had this thing called an encyclopedia, like literally a bunch of books that you went and that's where you got your information. It was out of date. It was biased. It was crazy, but that was all we had. We couldn't type on a computer, and go to Wikipedia. So, and I'm not saying that's perfect, but all information in the world is at our fingertips every single day. That's better. So the web was good and it created a lot of wealth. Well, then Web 2 came along. Well, now it was about read and write. Now we get at things like social media and e-commerce and things like Amazon. Remember, Amazon's only existed for 27 years. In the first 10 years, it wasn't really much of a success. So in the last 15 years, it's created trillions and trillions of dollars of value. And Web 2 created about $5 trillion of incremental wealth. It's pretty cool. But that's read, write. Well, now we're going to have read, write, own. Well, what does that mean? Well, if you think about what the internet did, it made information available. Web 2 made information two-directional for the first time and exchangeable. Well, now value can be accounted for and exchanged, and you can own your identity, your data. Again, in the old days, you post content on Facebook and they monetize your content, or you send your DNA to 23andMe and you get your heritage and they sell your DNA to a drug company for $1,000. Why didn't you sell your DNA to a drug company for $1,000? They didn't know how. Well, in Web 3, all of these things will be ours, right? Our data, our health data, our intellectual capacity, everything will be owned by us using blockchains. Well, I'll give you a simple example. Money. In the old days, I lent you money and I wrote down in my ledger papyrus or clay tablet or whatever it was, thousands of years. And you came back a year later to pay me the $110. And I'm an unscrupulous guy. I'm not trustworthy. You had to trust me, but I'm untrustworthy. So I wrote down 200. I changed the ledger. And you come back to pay me and the ledger says 200. And you're like, well, but I only borrowed 100. It's your word against mine. And I got the book. You were out of luck. With blockchain, it can all be based on truth. I don't have to trust anybody. I know on the Bitcoin blockchain, if I have a Bitcoin, I have a Bitcoin. If you have a Bitcoin, you have Bitcoin. If I transfer one to you, it's a permanent, immutable ledger. And that is an amazing innovation. So what blockchains do is they give us an ability to strip out, to liberate this $7 trillion in the trust industry, which is why the banks hate it so much, and use it for better purposes. And here's the cool thing. If you liberate $7 trillion a year, which is 68% of global GDP, and you put it back in the hands of the people, it turns out human creativity is the most powerful force in the universe. And with some additional capital, they'll create some amazing things.
In the interview, Yusko also addressed the prevalent concern many people harbor regarding artificial intelligence, a topic that gained heightened attention in the past year, particularly with the surge in interest around ChatGPT in December. Numerous articles were circulated expressing apprehensions about how artificial intelligence might jeopardize jobs and livelihoods for billions globally. While acknowledging the risks, Yusko views the potential job disruption as a necessary evil in the upcoming battle of innovation set to unfold globally. According to the esteemed hedge fund manager, although billions of jobs might be lost, tens of billions more will emerge as replacements. Yusko cites historical instances where entire industries were wiped out, resulting in job losses, yet today, we have a greater number of jobs worldwide than at any other point in history. Returning to the interview, Yusko delves deeper into discussions about Bitcoin and the broader cryptocurrency industry.
Blockchain does is by getting away from trust and moving to truth, we liberate this capital and allow us to build a better future. And so when I think about digital assets, I absolutely want to own Bitcoin. Bitcoin is the first use case of a blockchain, and it is digital gold. Well, what is gold? I said gold is money. It's the only money that's ever existed. A single ounce of gold for 5,000 years bought a fine person's suit. From Cleopatra's time to a suit of armor to a zoot suit to Savile Row today. Single ounce gets you a fine person's suit. Okay, perfect store of value. But here's the thing. If I had a bar of gold right now, and I wanted to break it in half and send you half. Two problems. One, I'm not strong enough to break it in half. Okay. Even if I could break it in half, I can't stuff it in my computer and send it to you. So it's not very portable and it's not very divisible. But if I want to send you Bitcoin, I can tap a couple buttons and bing, I can send you value. So Bitcoin is equally scarce. It's permanent, immutable truth, and it's portable and divisible. It's just better gold. Gold is the base layer of money in the world. All currency is built on top of it. Central banks own gold. They create currency using debt on top of it, dollars, yen, euros, bolivars, whatever. Same thing will happen here. Bitcoin will be digital gold, and then the digital age will be built on top of it, and every country will have their own digital currency. Now, some of that's a little dystopian. I don't want the government to be able to tell me how and when and if I can spend my money. Imagine this, central bank digital currency in the future. You get paid on Friday, go have a few cocktails, drunk text about the president, and you wake up next day, your money's only worth 70 cents. Mark, that could never happen. Yeah, it could. Or worse, they say, you know what, if you don't spend this money by Friday, it disappears to encourage consumption. Or worse, Walmart pays a little something to the government. Your money doesn't work at Target anymore. That could never happen. Yeah, it could. It could. So CBDCs, lots of problems and challenges. Governments are going to have them. They'll be digital fiat. China already has one. Ultimately, fiat currency is bad, evil, horrible, fine. Bitcoin's better. It's a store of value. Think about being in Venezuela. If you stayed in bolivars, all your wealth is gone. All your family's wealth is gone. All of it gone, zero. Had you converted those bolivars to Bitcoin, you still have your Bitcoin, and it's worth a lot more. So Same thing in Turkey, same thing in Argentina, same thing in the United States. 3 years ago, if you bought Bitcoin at $10,000, right? The money that you have is now worth half as much because they printed $10 trillion, right? The price of everything is up. So your value, your currency is down, but your Bitcoin is now worth 26,000. That's better. But the Bitcoin didn't change. One Bitcoin, still one Bitcoin. What happened is the money got worse because we price Bitcoin not in Bitcoin, we price it in dollars or yen or bolivars or Argentinian pesos. So it's that relative value that matters.
In recent developments, billionaire investor Stanley Druckenmiller emphasizes the importance of owning Bitcoin. During a discussion with iconic hedge fund manager Paul Tudor Jones at the J.P. Morgan Robin Hood Investors Conference in New York City on October 24, Druckenmiller, when queried about gold and Bitcoin, disclosed, "I'm 70 years old, I own gold. I don't know about Bitcoin, to be frank." However, he acknowledged Bitcoin's appeal to the younger generation, recognizing it as a store of value, especially for its ease of use. Druckenmiller expressed surprise at Bitcoin's rise but noted its popularity among young people, particularly on the West Coast. While Druckenmiller was a Bitcoin investor in the past, he exited the market last year during the U.S. Federal Reserve's quantitative tightening. Despite this, he acknowledged the significant role the cryptocurrency industry could play in the Renaissance, highlighting the growing distrust in central banks. Druckenmiller's perspective and comments during the interview prompt reflections on the evolving landscape of Bitcoin and cryptocurrencies. Share your thoughts and observations on both Yusko's interview and Druckenmiller's stance on Bitcoin in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.